What's up, guys? Welcome back to my personal finance channel. My name's Kyle DePepe, and today I'm going to be talking about GameStop, as well as this sort of applies to some other companies. But if you're watching GameStop right now, it's halted, right? It stops trading. It stopped trading at, like, I don't know, 170 something. It stopped trading at, I think, 153 right now as I'm filming this. And the reason it's doing this is because of these things called limit up, limit down. Okay, so it's not the exchange is halting it. It's not Wall Street. Well, it kind of is Wall Street. It's basically a regulation thing that they put into place where it's trying to prevent crazy volatility in stocks. So at a very simple level, there's a lot of factors that go into this, but I think it's like a 5% band, right? And it's kind of like on a rolling basis. So it adjusts every 30 seconds based on the current price. If a stock moves, let's look at it very simply. If you had a $100 stock and there's a 5% band, that means limit up is $105 a share and limit down is $95 a share. So if that $100 stock starts trickling higher, goes to 101, 102, within that 30-second window, as long as it starts moving up, after 30 seconds, that new 5% band will readjust higher. So if it moves up to 101, 102, then it will be 5% higher from that, or 5% lower than that. However, if a stock moves very, very quickly, meaning it goes from 100 to 105 very fast because of, let's say, news that comes out, or panic selling, or a short squeeze, it goes straight up or straight down and hits that 5% limit. So it goes from 100 to 105. What happens is that if there is enough buying pressure, right, and the stock never ticks down off of that 105 level, that band never gets readjusted, and it will sit at that level for, I'm actually not sure how many seconds, but let's just say after 10 seconds of trading at exactly 105, what happens is that stock gets halted for a 5-minute period, and then it starts trading again. Now, it's not exactly 5 minutes, but it's roughly 5 minutes, and then there's price discovery. So basically what it does is it looks at all the orders on the book, so all the buy and sell orders that are out there, and sort of finds a price parity point, and that's where it opens for trading again. So when it opens for trading, there's a new 5% limit up, 5% limit down band, and if it were to quickly go to one of those prices, it could get halted again. So you might see multiple halts in a stock throughout the day, and that's just because of volatile trading. Now, these bands change or get wider depending on the time of day, the price of the stock, and all these things, but this is just a very simple explanation of limit up, limit down, and why you see it happening in stocks like GameStop. I think it also happened a couple times in AMC the other day, and that's just because of wild fluctuations very quickly in the price of these stocks. And if it sits at that limit up or limit down for X amount of time, it gets halted for 5 minutes. So these trading halts aren't Wall Street saying, oh, let's stop the trading, stop the trading. It's something, it's called a circuit breaker, limit up, limit down. It's built into the system. So this can happen on any stock out there, and it's not an exchange putting this into place. It's just how the market is set up right now. Now, the one thing that the exchanges have put into place is that exchanges like Robinhood and Interactive Brokers are actually limiting or not allowing customers to enter new positions on stocks like GameStop and AMC. So right now, nobody can buy on those things, which means you can only sell. So it's kind of the inverse of what's happened a couple of days ago with that short squeeze, where basically all those short people had to cover their shares and buy it back. Right now, nobody can buy because half the exchanges that are really popular are basically saying, nope, we're not allowing it, but you can exit your position. So it's kind of forcing only people to be able to sell, and therefore GameStop has been collapsing in the last 5-10 minutes. People are panic selling, they're taking profits, they're trying to get out, and it keeps halting limit down. So that's why you really need to understand how the market works, limit up, limit down, how short squeezes work, how gamma squeezes work. There's so many different facets to how stocks can trade and what makes them trade. And when it's halted, you can't get in and out of a position. And if it gets halted line down, it could open up 20, 30, 100 points lower, and you don't even have a chance to sell. So again, be very careful trading out there, guys. Definitely put in some limit orders if you want to sell and buy, because if you put in a market order, you're just going to get executed at whatever price it is. So if it opens 20 points higher, great if you were trying to sell, but if you're trying to buy at 170 and you place a market order, when that stock opens for trading, it could open at 190 and then gap right back out, and you just lost all that money that you bought because you placed a market order instead of a limit order. So be careful out there, guys. Definitely understand how the market works. A lot of people don't even know about these limit up, limit down trading halts that happen throughout the day. And if you guys have any more questions about this stuff, leave it in the comments below. Let me know if you want to see a video further on some of this other stuff. Hopefully this is sort of starting to make a little bit more sense to some people. But there's definitely a lot of aspects to the market that I didn't even know about until I was an actual like prop trader. I did day trading for 2.5 years and learned sort of the ins and outs of how the market actually works on an intraday basis. And I've seen some of the crazy things like this happen. So again, be careful out there, guys. But if you enjoyed the content, please give it a thumbs up. Subscribe to the channel would really help me out. Would really appreciate it. But until next time, thanks for watching.